Gareth Soloway from InTheMoneyStocks.com is back once again today to talk rebounds in Bitcoin and the US dollar. But what about gold and silver? This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Gareth Soloway, welcome back to Metal Money. How are you doing?
I'm doing really well. Thanks for having me back again.
Glad to have you back, Gareth. Appreciate the time. Gareth, I got to go back to our last conversation back on August 24th earlier this year. And at that time, we were looking at Bitcoin. Once hitting that $52,000 level, we were looking at Bitcoin going a bit lower. And as we all know, it didn't. It hit 60,000, went above 60,000. What happened?
Yeah, so back when we were talking in August, it was just to what I call the scene of the crime right here on the charts. And it did have a nice pullback off of that. That was classic resistance. And then what we saw was the momentum coming in from the expectation of the ETF futures launch. And that really catapulted this thing back to the all-time highs, which basically pierced the 65,000 level. Now, what's fascinating about this is that just as it was piercing 65,000, it was literally the day of the launch of the Bitcoin ETF. And I think you have to look at it in two ways. Number one is that there's a lot of hype behind that launch. So that was driving investors to say, oh, this is going to be huge. An ETF is going to let so many new people into this space. So I want to buy Bitcoin. And then I think you also had the player who was the institution who was debuting that ETF also doing their best to push it up and make new all-time highs. And if you think about it logically, right, if you're launching a product, what's the best thing to get the most hype around your new product? Well, it would be if Bitcoin in this case was hitting the highs, and that's going to get the most buzz around that ETF launch. So I think there was a twofold power trip there that pushed Bitcoin up. And then you could see what happened was they lured investors in where it broke the previous all-time high, went to about 68,000, and then as soon as the ETF was out, what has happened to price? Price has come right back in. Now the question is it consolidating in a bullish manner to go higher, or is it basically done and is it going to pull back? Right now you have a technical double top here. You have this high and this high. But again, we're still close enough to the highs where Bitcoin could break out. What I'm following today, folks, or in the next couple days, watch 63,000 to the upside. Right now we're trading just above it, but you want to see an actual daily close or more above that. Or on the downside, if it breaks 58,000, that would be a very bearish sign. So you're basically trading between 58 and 63,000 here, and that's going to be your range where if you break above, it's going to likely go to 70, I think. If you break below, you're looking at probably 53 as a downside target.
Gareth, also since the last time we spoke back in August, we saw on the daily chart for gold reach as high as $18.30 and fall $100 and dip below $17.30. And now finding a fair amount of resistance at that $1,800, sort of a psychological level. From your position as a technical analyst, what is causing these short-term headwinds for gold?
Yeah, so that's a fantastic question, and I think this is actually a bullish consolidation going on in gold. But you're right, 1800 has been psychologically a resistance point here. So to me, when I look at the chart on gold, it's been chopping really from the last, going back to June, it's been going up and then it has a sharp pullback and then up and a sharp pullback. And right now we're kind of in the upper portions of one of those moves. Now, if you look at the last 20 years, as yields have gone up, because there hasn't been inflation in the system, gold has been pushed down, right? Because it's more of a risk on trade. We have seen a little bit of a decoupling with that because if you look at where yields were back in June or July, yields were much, much lower. We've seen yields get as low as about 1.2 to 1.3% on the 10-year and then push back to about 1.6 to 1.7% more recently. And in theory, over the last 20 years, gold actually should be down much, much more due to that push, and it's not. And what I think the market is sniffing out here is that you do have inflation creeping in more and more. The Fed has even said it's not so transitory anymore. We're looking at supply issues. We're looking at just overall inflation with wages in the U.S. especially. And I think what you're seeing here is that accumulators are starting to step in on every dip. the people that know that gold is going to have kind of a rocket ship effect eventually. And what I'd like to do is harken back to the early to mid 70s period. So remember, between 75 and 85, you had a lot of inflation in the system, 1975 to 1985. If you go back to the early portion, gold was a big underperformer there, even to about the mid 70s. And then really towards the later portion in the 70s, where inflation really got sustainably, excessive, gold took off dramatically. So if you look at the price action of gold, everyone's bearish on gold. Oh, it's not sexy anymore. It's not going to perform because you have Bitcoin, interest rates are going up, so gold should go down. Well, yeah, interest rates going up in a deflationary or no inflation environment cause gold to go down, but we're starting to enter a new phase. And I think that gold is preparing here for a big dramatic move to the upside. Just to give you guys a sense, I'm looking to buy more physical gold myself. I've been investing in things like GDX and the GLD recently, and I'm getting ready for a bigger move up that I think will come over the next 6 to 12 months in spot prices of metals overall, but specifically gold.
I'm going to put up a chart here just to touch on what you said, a weekly chart where we saw gold going back to where it first moved up in March of 2020 from sub $1,500 level to roughly 2030 in early August of 2020. And gold, it has been in sort of a downward trend or consolidation at best. How do we see equities continuing to rise and gold still consolidating despite the months-long talks of inflation and rising inflation? And it is here today hitting our pocketbooks.
Yeah. Yeah, so there's no doubt about that. And you can see here on the chart as well of the GLD, this bullish, this is actually a bullish consolidation digestion pattern. In fact, you could even make a case that you could do parallel lines here that the chart has kind of held between off of this dramatic move up. So this is actually a very healthy thing for gold to be doing in terms of technical analysis, where it has a major move up from basically, the late 2019 all the way through mid 2020. And now it's digesting that move. Again, I think you have to look at it and say, well, equities are at all-time highs. Usually gold would be even down even more because it's kind of the risk on trade is going into equities versus gold. The fact that gold has even performed as well as it has over the last year and a half, to me, it's telling me that there's a lot of liquidity in the system, that probably smart money is accumulating as well, which is keeping it from really dipping back down. The average investor, by the way, let's be clear on this. The average investor is not willy-nilly buying tons of gold, right? They're in stocks, they're in Tesla, they're in Bitcoin, they're in, the sexier names out there. So if gold isn't going all the way back down to where it was trading, at 13, 1400, 1500 prior to that big move, it's got to be telling you that you're getting some buyers, some big significant buyers in the picture here. And again, big institutions are the ones I want to follow. Overall, I think that inflation is going to stay hot for years to come. I think you'll be looking at 4 to 5% minimum for probably the next 5 years. And I do think that eventually, when Bitcoin kind of loses its luster, when the stock market actually has a serious correction of more than just 5 or 10%, people are going to look and say, okay, well, where do I put my money? We have so much money now in the stock market, in other assets. Where are we going to go? And I think gold is that recipient, in my opinion.
With silver, this weekly chart shows the same thing as gold, a long consolidation period after hitting a recent high. Why is silver a volatile metal? I repeat, a volatile metal. Why does it seem to be chained and on a leash? Is there anything in your analysis that is showing a breakout in silver in either the upside or downside in the short term?
Yeah, so silver, I've been very impressed with the recent performance. So it was really looking pretty nasty from April all the way until October, where it was in a pretty steep downtrend. Now, you're right that the same type of longer term pattern has shown itself here, where you basically have two parallel lines. And I can remove this one here. But yeah, basically you have consolidation going on, which is overall longer term bullish. This downward move was not pretty, but I like the resumption. So if you look at this low pivot here on the SLV chart, you had a pivot low, pivot low, pivot low, and notice how you broke one day below that and how quickly it recovered. Anytime you break a support line for one day and recover the next day pretty much instantaneously, what that's telling you is that there's institutional interest there. They did not want it to get below that level and hold for more than a day, which would have coaxed in more selling pressure. So they swooped in, they bought silver up. Now I think you could look at the performance of silver being very sideways with two a kind of a two-pronged attack. Number one is the economy is obviously slowing down after the huge kind of robust GDP numbers that we got 6 months ago or so. So that's a negative on the industrial side. But then you also have this inflationary side where there's so much interest. In fact, you could argue that there's more interest from the retail crowd in silver because it's a cheaper metal than gold. It's kind of like buying the Doge coins or the Shiba Inus, if you will, versus Bitcoin. The smaller investor is always attracted to the cheaper price. So I think you have a lot of average investors getting involved here on silver. There's always been talk about can it do a short squeeze? We saw that back with Wall Street Bets as well. But overall, the longer term is very, very bullish. I think you might see a little bit more retrace over the next couple days in price. But honestly, if you're not allocated in some way to metals to protect yourself against inflation, I think you're doing yourself a big disservice here. I think you have to have exposure to gold, silver, palladium, platinum. Now, again, make sure it's a smart amount of your portfolio, 10% or so. But you got to be thinking, again, the printing of money, as much as we hear about the Fed looking to kind of taper, they're never going to be able to get out of the way, folks, until the whole thing comes crashing down, right? Every time we have a crisis, what do? They just print more money. They lower interest rates even more than the last crisis. And sure, they could taper a little bit, but ultimately, at some point in the next 6 months or 12 months, the markets are going to dump. The Fed will feel the need to come out and prop things up. Remember, the dual mandate of the Fed says they have to monitor unemployment. Well, unemployment basically means that they can never let the stock market go down significantly because as soon as the stock market collapses, what do they have to do? Well, if the stock market collapses, people have less money to spend. Therefore, the stores, the consumer spends less. The stores have to lay off employees. And then the Fed has to come out and say, well, we got to jack up the stock market again to get that wealth effect so people go out and spend more. So, I mean, this is such a kind of a mess that has been built by the Federal Reserve. And ultimately, the recipients of the positivity is going to be metals and eventually cryptocurrency once I think you get some sort of better retrace from where we currently are.
Yeah, I completely agree there. You said an interesting word there, wealth effect. I think it's a word that you don't often hear. I think it's a word that guys are even afraid to say nowadays with what's going on in the markets. But Gareth, with the monthly USD index chart, in recent times, it has shown where the US dollar, when it gets close to that 90 level, it then quickly moves back up. With a fairly strong inverse correlation between precious metals and the US dollar, where do you see the U.S. dollar going after bouncing back from 90 in July to 94 today?
Yeah, so I mean, the dollar definitely has gained some traction. I think the fact that the Fed is talking a strong game right now is one of the reasons why the dollar has strengthened. If you look at, every time the Fed talks about raising interest rates or talks about, in this case, tapering, everyone's like, oh, yay, the Fed is in control. They're not going to be pushovers because of, the pressures against them that's basically meant that they've kept yield or interest rates at low levels. So I think that talk is what helps talk the dollar up. But ultimately, I mean, I don't know if I'm the only one that sees this. I know you see it as well. The Fed is mostly talk, and then whenever they say, okay, we're going to do something, or they end up doing it, the markets historically have sold off, which then backs them off, and then the dollar falls back. And I really don't expect much different. I think you could see a little bit more strength in the dollar once they start tapering. I do expect them to taper a little bit here. Because I think they want to with the markets at all-time highs. I think they have that leniency to do it. But I will almost guarantee, and I can't guarantee, but almost guarantee that within 3 months of them starting to taper, the markets will have some sort of fit, and then they'll probably say, okay, we're going to stop tapering for a couple months. We'll see how it is. Then you might see the economy slow down. There's been a lot of talk from institutions like JP Morgan and Bank of America that once we get into 2022, all the stimulus checks wear off, the economy slows even more. And then, the question is are they going to continue that tapering, or are they going to start reversing it and pushing more money into the system? So in the shorter term, with the talk of tapering, and again, we're expected to hear from the Fed that they'll probably start in December or January, I think think the dollar will like that. Investors will feel confident that the Fed is doing the right thing. But I strongly encourage people to understand, if you look historically, they do the right thing for about a month or two or three, and then they have to back off quickly because the markets or the economy has some sort of black swan event where they have to go back to easy money policy.
Okay, and so with that outlook with the U.S. dollar, where do you see gold and silver moving short term?
Yeah, so short term's been a little bit trickier. I think for me, I'm more in a neutral stance in the very short term. And when I talk short term, I mean the 2 to 4 week period. I know that's very short term to most people, but I think that's kind of the angle. Even maybe 2 to 3 months out, a little bit more on the choppiness. But I think, again, as soon as you see the Fed blink, the dollar's going to start to decline. The markets are going to start to even get a little bit worried. And this is the crazy thing, right, is that, not to get back to the Federal Reserve, but it's such an important intertwining in our system today. But the Fed is in a position where, they basically will blink and the markets will react. I don't necessarily think, everyone thinks that when the Fed eases again, the markets will just shoot to the upside. I'm in the camp where the market wants a Goldilocks scenario. Like, I've even had people say to me, so do the markets go straight up if the Fed were to come out in the next meeting or so and say, hey, we're not going to taper at all? And the thought process is easy money would be a great positive for the market. I don't think that's the case. I think the market wants to know that the Fed has control. And if they really are too lenient or too harsh, either one causes a sell-off in the market, versus if they come out and say, hey, listen, we're going to taper by $10 billion a month, that's kind of the Goldilocks scenario where the Fed's not being too harsh, but also not a weakling as well. So going back to the dollar again and the gold prices, I do think that in the shorter term, the Fed will kind of show a little bit of backbone, but I think it only lasts for a very short amount of time. So expect choppiness in the metals, I think, for the next month or so, and then I think the metals start to break out into the year end.
Right, it's a lot of great info there, Gareth. We'll see how all of this unfolds. So Gareth Soloway again from InTheMoneyStocks.com. We appreciate the time that you've given. Hope we can do this again soon.
Absolutely. It's always a pleasure to talk to you. Have a wonderful day.
There you go, Gareth Soloway from InTheMoneyStocks.com letting us know where he sees the candlesticks bouncing or moving to in the short term. As always, please leave your thoughts in the comment section below and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.